Okay, I'm ready if everyone else is ready. Right. Let's see what charts I've got up here at the moment. Okay, I've got the E-mini up, so I might as well start with the E-mini S&P. Probably quite appropriate, seeing as it is now testing all-time highs, which were last set in July. And I think we've managed to get as high as 1987 today, so that July high. Anyway, well, obviously all-time high, it's a big one. We last hit this level in July, as I say, we took a big old tumble, which I'm very proud of myself for predicting, and I did bang on about that. Sorry if I bored you silly on Twitter, but hey, you gotta let everyone know sometimes, haven't you? We managed to see a big old dip down to 1890. There was good support there, and we've rallied it back up again. You can see actually that 100-day moving average, how that spiked below, and then we recovered quickly off there. That was a nice big bullish candle that indicated the end of that correction there. All fairly straightforward, really. And since then, we've had a really good run up. So yeah, what happens here? Well, there's only one thing to say, really. If we don't get through the all-time high convincingly and at least close above it, then we've got a potential big double top. Well, not that big, but a decent enough short-term double top pattern to send us significantly lower through to the autumn. Beyond there, I wouldn't be sure. I'm not going to try and predict any sort of crash conditions. I know lots of people are talking about that with markets severely overvalued. That isn't on the cards at the moment, certainly not. But yeah, if this is it would be a very nice little double top pattern there, and a new all-time high today followed by a lower close would be a reversal, obviously, so that could be significant. If we were to close below yesterday's low at 1973, well, that would be very negative indeed. So with the S&P, it's a wait-and-see situation. If you want to try shorts, fair enough. Maybe stops above 1990 or maybe even above 2000 if you want to give it a bit of leg room. 2000 is obviously a big old psychological number, and it could have an effect. So we'll have to see until we see whether we reject that level or whether we close above it. We don't know what's going to happen next, but it's a decisive day, shall we say. Can't really say anything more than that, can I? We're getting quite overbought on the daily stochastic. Where's my cursor gone? Lost my cursor. Here we go. We're getting overbought down the bottom here on the daily stochastic. I mean, I wouldn't pay too much attention to that. The weekly chart, that's nat gas. Hold on a sec. This is a new chart system I'm using, Metastock. I tried it before and it was awful, but I've tried it again. It's actually quite good. So but you'll just have to bear with me because I'm not very quick at it. Okay, weekly chart, giving us any more clues? Not really. You can see how that trend line held beautifully here. This trend line goes all the way back to October 13, I think, was it? We're just trying to have a little peek through. Okay, so we'll widen it out. Get a look at the shorter term. So yeah, clearly we're not getting anything like the sort of recovery that the US markets have seen. The DAX certainly led some of the markets lower. We were already establishing quite a negative trend here through July before markets broke at the end of July, and obviously this accelerated. But if you follow me, you'll know I was already saying, look, we failed to break 10,000. I'm sure you've had me bang on about this over and over again just on these webinars. You know, we failed to break 10,000, big psychological level, which is why I've got 2,000 in the back of my mind for the S&P. We were already establishing a bit of a downtrend. It didn't look good anyway. I was wary of a big summer correction, as if you follow me, you'll probably been bored senseless of me banging on about anyway. And of course we got it, but we're not really getting much of a correction. I love a Fibonacci, and in this case, you can see we've managed to get back as far as 38.2%, which is around the 33.40 area. We've blipped through that today. We've got as far as I think 90, well, into the high 93.70s, but that's not that convincing, as you can see. What have we got for the high of the day so far? Yeah. 93.75. We're going to have to at least close above 93.40, preferably above, I think it's Monday's candle, 93.53. If we can close above the 93.50-40 area, well, that shows some promise, and I suppose we would need the S&P to clearly break through the all-time high which it hasn't convincingly done yet as I speak. You can tell from what I'm saying that I'm not overly convinced about this, and I've got a feeling we could turn lower. We did see a bit of a sell-off first thing this morning. I thought that was the start of it, but we got a really good bounce off in the DAX on some economic numbers coming out. So again, the DAX is a fairly interesting point this week. It's a question of whether we can hold above 93.40 or whether we fail to close above it for the third day. If we can push on, well, it's fairly obvious that 94.72 on the fib level, on the fibs are important at least. But 95.08 up there as a 100-day moving average. There are some levels in between, but I'm not going to go into them here. If you've got my reports, then you'll have those today. So yeah, again, the DAX is just a very decisive area, and we'll just have to wait and see what happens there. It's Friday tomorrow, I do believe, so of course the weekly close is more significant. If we don't manage to close above 93.40 on a weekly basis, that would of course be a little bit more negative. We are getting overbought on the stochastics anyway, on the daily chart, and if I dare try to look onto a shorter term chart, see if I can get it to load. Please load. I've actually sold some stock markets today. I'm short a little bit of DAX, about 10 points lower than we are now. I'm short a little bit of S&P around here, just on the hope that this is a bit of a topping pattern. Short term, yeah, we've got some moving average resistance at 93, 90. I've got the right chart here. Yeah. 93, 93. Why am I seeing that? Yeah, we are. Okay, we've halted just below there, so that's fine today. This is a 4-hour chart. I do like a 4-hour chart. Cuts out a lot of the noise of some of the other shorter term charts. MACD a bit overcooked. The 4-hour stochastic, not the most positive at the moment. It's a little bit of a divergence. So, yeah, you can probably tell I'm sort of leaning towards the downside. Really, that's my bias. That's why I would favour a move lower. This DAX rally, I think, has been very unconvincing, and to me, it just looks like a correction in a bear trend. I could probably stick some trend lines on here actually while I'm at it. See what we get. That's not going to work, is it? No, sorry, hang on. I need to do that. No, that's way off. That's not particularly relevant, but this one might be. There you go. That is relevant. So that one's working quite nicely. Okay, I like that. That gives me a little bit more ammo to suggest that the DAX won't go too far today, and we won't really be able to break above that 93.40 on a closing basis. Anyway, we'll have to see. Probably not much more I can add to that. I'm not going to go into giving you downside targets and everything else if we can't make it. I won't worry about doing that today. Okay. I'm going to just show you the Euro stocks. I know probably not many of you trade it, but hang on a second. STX. Need to do that. Oh, this is fun. No. STXC1. Come on. You can do it. No, I don't want a search box. I know what this is going to do. It's going to give me the DAX and the Euro stocks. Oh Lord, this is going to be painful today. Oh, someone's just asking me what we covered. We just covered the E-mini S&P, so I haven't moved on to the currencies yet. Don't worry, I'll happily do those for you. I can never get this lovely system of mine to work properly. Oh, come on. Right, I was going to show you the Eurostoxx chart. I don't anyone actually trades it, so things it won't load. Let's just forget that. Hang on, hang on. Oh, we've got it. It is worth showing you this. I do follow it quite closely. It's quite a good market, and similar to the DAX, we're not really getting a decent correction to the upside after. Well, I should say a decent bounce in a bear trend after the correction is probably better terminology. You can see similar situation here with the Eurostoxx. The 38.2% retracement target, 31.08, has been hit perfectly. We've got 100-day moving average at 31.15. So there's a nice little resistance area within that sort of 10-point range, and certainly not managing to get through there at the moment. I do believe that's right. What have we got today? High of 31.08 on the 21st of August yet. Don't trust this data. So yeah, I mean, it's a similar situation. I'm sure if I looked at other European markets, it might paint a similar picture. So this is going to be a real problem for the Eurostoxx. And I've got a feeling we're going to start turning lower. So anyway, we'll probably get an idea before I finish today's webinar. Okay, we'll move on to currencies. Hopefully, if I can get these things to load, that would be lovely. EUR USD. Please work for me. Oh, God. That's dollar. Oh, my Lord. Right, here we go. Oh, my God, I think I might have the euro. Right. Someone's asking me a private question about the euro. I'm going to do it anyway. Okay, if you read my reports, you will know already today that we've hit an important support level, and it's just holding beautifully. It's a fib. It's 132, 50, 40 area. We've hit that, and having been oversold for quite a while. Sorry, hang on. No, sorry, we're not oversold just yet. Okay, this is a big support level, 132, 50, 40. I've got a feeling that this is going to hold. It's interesting because if I show you the weekly chart, oh please, weekly. There you go. This is a very clear picture for the euro. If you follow me on Twitter, I have mentioned this a few times, probably today, in fact. Okay, so we had a big old rally from the low in 2012, 148 something it was. I mean, no, sorry, 120, 40. Thinking about cable there. A good run, good 2-year run. And since then, of course, we've come off since May of this year. And this is a 38.2% retracement of that whole move up of almost 40 cents, I think that was. So yeah, it's very good support. Weekly chart is of course oversold, but has been for a while, and that never means an awful lot. But I just think that's good enough support to at least cover your shorts. If you've been running shorts, you've had a great run. Once we broke below the 100-week moving average, that worked really nicely as resistance. 200-week moving average. When we got through the 100-week moving average, we plunged. But I've got a feeling that might be it just for now. I'm not saying we're going to turn around and start a bull run. But what I am saying is it's probably a little bit too risky to run shorts any further, at least. Let's just see what happens at this level. You could get a spike up. So far, it's held beautifully. I think the lows are around the 132.40 area, the low 132.40 area. So it's pretty perfect. What is the low today? 132.41. I mean, couldn't be more accurate, could it? Trading up at 130 in the 132.60, mid 60 area now. So as far as I'm concerned, so far this is holding, and therefore we've got to be careful about a little bounce back. As I say, I don't think it's going to be a huge one. You also got to bear in mind that we had this little triangle pattern. If I blow this up, there we go. We had a consolidation pattern, a continuation pattern. Nice, easy, obvious one. This little triangle here. There you go. Gives you an idea. And if you look at that width of that, which I think's we've pretty much now fallen the width of that triangle here, and that's another reason why we've achieved the target for that little triangle. And I'm wondering whether we can at least rally back up to the 133.55 area, 133.50 area, possibly. That's where this triangle is. You can throw some fibs on your own charts if you want to have a look at what fib targets we've got, but that's my best guess for the euro anyway. We've got a short-term bottom. We'll see a decent bounce up. It probably will be a selling opportunity. We'll have to see how far we go and what resistances we manage to challenge. But that would be my best guess at the moment. Not worth. I'm actually small long. I bought into longs a little bit earlier. Bought in the 50s. I didn't wait for the 40s. So I'm looking for a short-term bounce back, and if I can run that for a couple of days and make a little bit of money, I would be happy with that. Only a small position. Go for the GBP now. Feeling confident I can actually get this to load. Here we go. Right, daily chart of cable. Now this one's fooled me a little bit, to be fair. We also hit a very important fib support level. Hold on a second. Okay, there's the weekly chart. So 166.20 area was quite important. And bearing in mind we've gone down, this is the 7th consecutive week of losses for cable. I thought, bearing that in mind and bearing in and the fact that this is a good support level, I really thought we were going to hold it this week. We're obviously very oversold on the daily chart. We have been for a while. We'll have a look at that in a minute. But I'm wrong. We are through 166.30. There's a bit of short-term support, fib support around the 166.15 area. So I really, as I say, I really did think that 166.30.15 area was going to hold. If you read my reports, I did warn that it was such a big level that stop hunters would probably try and push it through, trigger some stops, and then maybe take it up again. Okay, we can't rule out the fact that that could happen. I'm long that as well. I had a stop in at 165.60, and I managed to, by the skin of my teeth, survive getting stopped out this morning. So I'm actually hoping that we do manage to recover that 166.15.30 area. It's Friday tomorrow, so the weekly close will be important. I'll say that a few times today. So if we can close above 166.30 tomorrow, I would feel confident that we've tested that, spiked below it, and we could then start a short-term recovery in this one as well. I did pretty much predict a stronger dollar a few months ago. Well, I certainly wrote an article on Independence Day, and we have seen it. I'm just wondering if we can now see that reverse for the next couple of weeks at least, and figure out whether this is the start of a new trend or not. I've got a feeling it is. I think the dollar will continue higher. But right now, I'm wondering if euro and cable can at least see a little bit of a bounce back. We'll see. At the moment, I'm wrong about cable because it has dipped below those important support levels. But I've just got this feeling we can still recover from here and get back above 166.00. We shall see. We need to, otherwise we are going to go lower. Right. Stick with currencies. Aussie dollar has also been quite interesting, actually. show you why. Well, when I say interesting, it's been fairly easy to trade. Again, if you followed me on Twitter, I've been banging on about the Aussie for quite a while, and it's just very simple. There's the weekly chart. I'm actually going to go straight to the daily chart because that doesn't tell you an awful lot other than we had a good run, but really have just gone sideways ever since April. As you can see, this is on a weekly basis, at least. This is just now stuck in a range. To try and get a more clearer picture, we'll break it down. We'll go to the daily. And you can see that, well, I think you could call this a head and shoulders. I think you could say that this is the right shoulder, this is the head. Sorry, that's the left shoulder. Don't know my left and right. That's the left shoulder, that's the head, that's the right shoulder. I think you could say that. It's not clear as crystal, but I kind of like that theory. There you go. I'm going to take this. This trend line actually has also worked quite nicely. You can see how it hovered around, broke below, retested it, boom, that came down. So that was quite negative. The head and shoulders pattern I do like. That's quite negative. I'm wondering if this is a bigger head and shoulders pattern. It could well be. This could well be a big left shoulder. This could well be a big head. And then this could be a big right shoulder. But if that is the case, it's going to take 2 months to build it. So we'll have to just wait and see. I'm jumping the gun there quite a lot considering I trade such short term. I'm sure you do too. But it's worth keeping an eye out. Is this now going to be a big right shoulder building exercise over the next couple of months? Who knows? You can see that, can't you, clearly? If you can't, let me know and I'll point it out to you. But that's a possible scenario going forward. We're far from that right now. It's just me speculating. But what we are doing is building into this short-term downtrend. When I say short-term, it's been about 6 weeks, isn't it? You can see that. And it's pretty textbook. Broke below that trend line, tested it, headed lower. This little neckline thing kind of worked. We only closed above it once. And that's also, the blue line is the 100-day moving average. You can see once we got below there, we did manage to bounce back up off a good 23.6% fib support. And this is just trading technically, from a technical perspective, quite nicely, the Aussie dollar. I've been trading it in and out a little bit. I managed to get short just up here, just when we were testing the 100-day moving average. If you read my reports or if you follow me on Twitter even, I was talking about Aussie, not expected to get through there and would go lower, and it has indeed done that. So we hit 92.38, and you can see over here that that is the exact 23.6% fib support that I had. It's also the neckline here of this little trend line, or potential neckline, but it's certainly a trend line. So that was a great place to buy back shorts. I didn't buy it down at 92.38. I bought mine about 92.50. I missed it by a good 10 pips or more. But we've managed a good bounce back off there. So we'll have to just see. It could bounce around within this range. It could break higher and build a right shoulder. If it breaks lower, that's obviously negative. We've got 200-day moving average, the pink line down here at 91.72. I think probably it's wise just to trade the range until we see a breakout. Trade the short-term levels as well. If you want those, you can get them from me. But right now, I think the bias is certainly negative. But until we break below this good support down here at 92.38 level, then we'll just bounce around. And obviously, we're going to have to get through 93.40 if we want to make any sort of progress on the upside. And lastly, I'll do the yen. Hopefully. Code is JPY. There we go. No, the yen's been pretty good. Slightly confusing. Confused me anyway. There's another trend line I need to put in here, which seems to work quite well. This here, I think. No, that's not right. There you go. Okay, so we've got this big triangle thing, which I think is a continuation pattern. Well, it is now, but I had been going on about it being a continuation pattern. Got a bit confusing around here. I thought we were going to break out. We didn't break out. We came back down. I thought once we cleared the 100 and 200 day moving averages so convincingly with this big blue candle, that was it. We were off. But we came back quite aggressively, in fact, to retest this trend line here. Let me blow this up so you can see it a bit clearer. To retest this trend line here and then bounce right off it. And I have to admit to you that I was getting long here and I actually got stopped out on this spike low and I never brought back into it again. So I'm quite gutted about that. It just took off. So that really wasn't a happy day. I had no idea what caused that, but that was quite aggressive moves there. You can see that 2 or 3 days there was some really volatile stuff going on. I don't know what was driving it. Anyway, that spike caught me out. I don't know if it caught anyone else. And that's really annoying because I was saying that the dollar yen looks really, really good. It's one of the currencies that I'm convinced are going to push higher, and it's done it, and I've missed a blinking move. So it's quite frustrating. Anyway, spike below it. You can see that's a nice bullish candle anyway. The big long shadow, as they say on those candles, and the close near just below the open looks pretty positive. And of course, since then we've just taken off. We got back above the 100-day moving average. That worked nicely as support. We got through the 200-day moving average, pushed through this longer-term trend line here, and once we did that, of course, we took off, hit all my targets. And so, yeah, it looks good. There's no reason to really bet against this. I think we're getting a bit overbought. I wouldn't pay too much attention to that. I think it won't be too long before we. Let me see, we're already above this high, aren't we? 104.12. No, we've got to get through 104.12. We've got to 103.96. So we're testing April highs. If we can get through there, well, it's obvious we'll be heading up to January highs. And I think what was the previous high of that? 105.50. Don't know if we got any further than that. Looks like 105.50 was the high of that. Oh, yes, of course it was, because that was a big fib resistance on the longer term chart. Oh, I won't bother to go into that one now. I'm sure you're not interested. But if you look at a longer term chart, you'll see that was a big fib resistance. And in fact, we did say they would top out there, so I was quite pleased with myself. It did top out nicely. So yeah, keep an eye on the dollar yen. I think this is a nice bull trend starting now. Wouldn't get in the way of that. Okay, I'm being asked about euro. I've covered. Gold we'll do in a minute. Dollar Swiss. I'll do that after gold actually. Gold. XAU. That DAX is coming back. It's not been able to hold above 93.40. Well, it's just edging back below it now, and the S&P is just edging away from 1987. So, well, as you know, I'm hoping it comes low because I've got a little bit of a short on, just a small position. We'll see. Euro's holding up. Oh, Brent crude. Let's come all the way back. I'll show you Brent crude, actually. It's quite interesting. Okay, gold. Well, you know I'm not a bull of gold. And I retweeted an article that I'd written in July about how gold just isn't looking very positive. And it only ever manages to spike up on a geopolitical event, but it never manages to hold on to that gain. We are in a longer-term bear trend. I really haven't been positive about gold for a long time, and nothing's changing that view at the moment. We blipped around and we fiddled around above the 100-day moving average for a while. We've not managed to sustain that, and now today we're even breaking back below 200-day moving average. We're breaking back below these July and early August lows. So there's nothing good about this at all. I don't think you want to be long gold. I haven't thought you want to be long gold for a long time. Hang on, let me put the weekly picture up there and then show you how far back that little pattern goes. I'm sure you've read one or two of my articles and for InterTrader and one or two of the other websites, and you know I've not fancied gold for a while. I actually did fancy silver, but I got that wrong. It doesn't look like it's going up at all. Gold's coming back down with silver's going back down with gold now. There's your pattern. There's your big triangle. That's been going on for a year or two. This little pattern. So it's a case of probably staying within this range on the grand scale of things. You know, this is the bigger picture for gold. Of course, we're heading towards this trend line here. I wouldn't be surprised if this does hold. I'm not particularly positive on gold, but I wouldn't be surprised to see this hold. It's around the 1260, mid to 1260 area. That could hold at the moment. But we need to watch it carefully because the break lower is going to trigger all sorts of stops. And I don't think that will be very pretty at all. I think it won't take much at all before we're testing this low down here at around the 1240 area that we saw end of May, beginning of June. And of course, that would be a problem if that was to give way. But yeah, I'm not convinced about gold. I don't think it looks particularly good. That's all I'll say about it now. I'm not going to go into short-term levels. I'll do the dollar Swiss for you. It's not working. There we go. Anyone looking at bond markets? I know it's the Bund's off today. I think I read somewhere, I haven't had a look at the 10-year, but I think the 10-year came off a bit yesterday. I have to have a look at the bond market. It's not done that yet. Okay, so dollar Swiss. This is the weekly chart. I haven't had a look at this for a long time, so just let me try and get some sort of perspective on it. Try and break it down. Figure out what's going on here. No, that's no good. There's not much of a trend line either. Okay, we've had a really good run since Q2 of this year. Well, the obvious one for the weekly chart is that we're heading for some strong resistance from moving averages. We've got the 100 and 200 day, 100 and 200 week moving averages around the 9150, 9160 area. So that's going to be a big old struggle. What have we got for the high so far? 9145. Well, there you go. That's holding quite nicely already. So from a weekly perspective, this doesn't look too good. We're going to have a problem there. We're getting a little bit overbought in the weekly chart. So that's a slightly longer term perspective. You really do need to be aware of that level. That is going to be a problem. As the DAX and S&P ease off a little bit more, please go lower. That would make me happy. The daily chart actually is almost contradicting the weekly chart. This actually looks quite positive. You've even got a 100-day moving average potentially about to cross over the 200-day. The stochastics look good. Let's get some levels. Okay, I'm just going to break it down with some fibs. See if we can get a perspective on it. Nice double bottom down there. That signalled that low. I should chart this more often. It's quite a good little market. Now we are running into quite some resistance, and that is a bit of a divergence there on that daily stochastic as well. I wouldn't be getting long here. I've got someone talking about being long the dollar Swiss, and I don't think this is the area you want to be getting long at all. That doesn't look like a good idea to me, to be quite honest with you. You've got this year's high, in fact, which was in January at 91.56. You've got fib resistance around the 91.35 area. You've got that weekly moving average resistance. I think it was 91.50, 91.60. So that this whole 91.35, 91.55 area is somewhere that you do not want to be initiating longs, in my opinion. That's just my opinion. But I think there's a good chance it'll fail here. The daily stochastics are still pointing higher, but that's not a good enough reason for me to want to be long here. If I was long already, I'd certainly be looking to take some chips off the table, I think, at this stage, and just see what happens. Weekly close tomorrow is always worth taking note of, and if we don't manage to close above at least 91.40, look at these little highs up here in January on the daily chart, 91.33, 91.26. We've got to at least get through 91.35 on a weekly closing basis. Yesterday's high was 91.38, so we're just running into a lot of congestion around here. I would want to see us on a weekly basis close above 91.56, the January high, this year's high. But even then, we've got to convincingly clear those weekly moving averages. So I personally would not be comfortable being long this pair right now. That's all I can say. You have to make up your own mind, of course. It's just my opinion, and I have been wrong many times. So I don't like to give advice or tell people what to do, but if I've been asked privately. So that's the best I can say. It doesn't look good. In fact, if you want to try a short, and I wouldn't say no to doing that, it's quite nice. Low risk reward, really, isn't it? You could have your stop at 91.80 or something like that. That would give you enough room. If you were selling into shorts around the 91.30 area, you could have a nice 50 pip stop. And I think the risk reward ratio on that would be probably around 2-1, because you would be looking at 90.40 as a reasonable target, perhaps on the downside. I mean, we were there only a couple of days ago. It wouldn't take an awful lot, would it, send us down 100 pips in that. Euro US dollar, I'm being asked about. Well, I've covered that already, so I'm not going to go over that one again. Okay, what else? Gold we've done. I'm going to show you, I'm going to do some energy, just because Brent crude's quite interesting. Or if anyone's interested, I'll do Brent crude. Maybe I won't bore you to tears if you're not actually going to trade that. If there's anything else you want me to have a look, let me know. Just trying to think what else is worth looking at the moment. Gold, energy, done the Aussie, done the yen, done the stock markets. Oh, I see. You want me to have a look at the euro? Okay, yeah, no problem. I'll have a look at it. Well, I think what you want to know is if it breaks below my support level. Questions? Yes, Chris. Questions, mate? WTI? Sure, yeah, let's do WTI. That's actually not a very clear picture, to be fair. But let's give it a go. CL C1. There we go. I'm so pleased with myself loading these charts today. You think down? You know what? I do agree. Oil doesn't look that good. Brent actually looks all right. Ooh, what's going on here? Take a few of these off. Right, yeah, oil. We've got actually, it's probably easier if I just look at October CLV4, because we've got a rollover. That's a rollover gap, so I'm not going to take too much notice of that. CLV4. Yeah, not a pretty picture for oil, and this does really look like continuing. The weekly, this is the daily chart. It doesn't look particularly positive. Rollovers I don't enjoy. I never know whether to look at the month-only contract or the continuation chart, but this is the weekly chart anyway. So you can see we're below for the October contract only. So I'm just taking pure October numbers. We're below the 100-day moving average at 93, 100-week moving average at 93.43. That's never a positive sign. I'm going to take this as our fib. Now there you go. 92.54 is a 61.8% retracement, and that's usually very good support. 92.54, where have we been? 92.50, there you go. So 92.50 has held so far. And we'll just have to see whether it does. That's the key, really. I can't really add much more to that. We're getting oversold on the weekly chart. We've had one heck of a collapse, something that looks like we've not seen anything similar since, look at that, 2012. We seem to have had a big old dump in oil. This is the first time we've seen a dump like that since, over the past, 2 months or so. But yeah, we have retraced 61.8% of that, of the low of this, from the low of last year, 2013, for the October contract. So that should be good support, and I wonder if we can bounce off there. It's a big level. Well, not much more I can add, really. Either we will or we won't. Probably not worth running shorts any further, but until we get back above 93.50, 93.75, I wouldn't feel particularly positive about this. Last week's low is 93.85, so you can see that whole sort of mid 93 up to 93.80 area is where we're going to need to get back above to feel a bit more positive. At least if we can close above 92.55 on a weekly basis tomorrow night, that would be useful. And if we close below it, that's going to signal more downside. But you have to think, after such a big move, there is a decent chance of a bounce of a good support level. I would have hoped. I'll just try the continuation chart just in case there's anything I'm missing there. CLC1. Yeah, see, this doesn't look too good at all. Let's try some fibs on it. It's really not a pretty picture. Oops, that's not very accurate. There you go. Yeah, that continuation chart, this is why these rollovers sometimes confuse me. You never know which one to pay attention to. But certainly, on the continuation chart, this doesn't look good. And it's now rolled over to October. This is the weekly chart, not good at all. We're below 94.80. That's not useful. Let's try it on the daily chart, see if it's saying anything else. Should wrap up in 3 minutes. Okay, I'll finish off here then. Just let me see if anything is saying anything different on daily chart. Not really. No, doesn't look positive at all, does it? Rollover gaps, they do have to be filled, but I'm not saying that's going to happen in the near future. I mean, we could easily continue lower to this, well, this year's low, really. The end of last year saw a low around 91.77. The beginning of this year saw a low at 91.24. I mean, it does look like, from the continuation chart at least, that we could continue lower. So it's a case of, do we hold 92.50? If we don't, yeah, we've got another 80 to 80 pips or more to test those areas down there, I think. Okay, we've got to wrap up now, I think. So thanks very much indeed. Probably don't need to tell you what my website is. I'm sure you've already been there. But there you go. And in case you don't know, this is my Twitter. So you know how to get hold of me. Contact us page on my website, which is about to be relaunched soon, and Twitter, of course. Thanks very much indeed. Hope it was helpful.